Hey everyone, welcome back to Corporate Decoder, the place where we decode the stories hidden within company filings, and today we're going to see if CURIS Incorporated is really rocking and rolling, or if they're about to get rolled over. Alright folks, let's dive right into what CURIS Incorporated has been up to. This is a filing that basically tells us if a company is playing by the rules of the stock exchange or if they're in hot water. And who oversees this well? None other than the United States Securities and Exchange Commission, or SEC. They're like the referees of the financial world, making sure everyone plays fair. Now, what we have here is something called a Form 8. Think of this as an urgent alert from a company to investors. It is not a regular checkup like a 10Q or 10. It is more like when something big and important and often not so good happens. And the really important date here is the 20th of October 2025. This filing is all about an event that happened on that day, and it's not exactly a party announcement. So, what is the big commotion? It's about CURIS Incorporated and its listing on the Nasdaq capital market. You know, that big stock exchange where people buy and sell shares of companies. It seems like CURIS Incorporated got some not so great news back on the 21st of August. The Nasdaq folks, the ones who manage the stock market, sent them a notice. And this notice wasn't about a new product launch or a successful drug trial. It was about a potential kickoff, or as they put it, a delisting from the Nasdaq. What's the reason? Well, companies listed on Nasdaq need to meet certain standards. One of these is called the MVL's requirement, which stands for Market Value of Listed Securities. Basically, the total value of all the company's stock needs to be at least $35 million. If it dips below that, Nasdaq can say, sorry, you don't meet our criteria anymore. And that is exactly what happened to CURIS Incorporated. They weren't meeting this minimum market value requirement. Now, when a company gets such a notice, they usually have a grace period to fix things. CURIS Incorporated did ask for a hearing, which is like asking for a second chance to explain their case to a panel. This request put a pause on any immediate delisting, giving them some breathing room. And here is the update from that hearing on the 20th of October 2025. CURIS Incorporated got another notice, but this time it was a bit of good news, or at least a bit of extra time. Nasdaq granted them an exception and extension until the 14th of November 2025. This is their last chance, their exception period, to get back into compliance with that MVLS requirement. During this crucial period, CURIS Incorporated has to be super transparent. They need to immediately tell Nasdaq about any major news or events that could make it harder for them to meet the requirements by their deadline. Nasdaq, in turn, is keeping a close eye and can change their mind about this exception if they feel it's no longer wise to have CURIS Incorporated listed on their exchange. And the filing is very clear about the uncertainty. There is no guarantee that CURIS Incorporated will be able to meet the requirements by the 14th of November and stay listed. This is a serious situation for any company. Being delisted means your stock can no longer be traded on a major exchange like Nasdaq, which can drastically reduce its value and make it much harder for investors to buy or sell shares. It can also make it harder to raise money for future operations and growth. For CURIS Incorporated, this filing is all about managing that very real risk of being kicked off the stock market. And who signed off on this report, signaling that the company is aware of the situation and is officially reporting it? It's Diantha Duvall, the Chief Financial Officer. As CFO, it is their job to oversee the company's finances and ensure it meets these critical regulatory and listing requirements. Now, looking at this situation with CURIS Incorporated, it's clear they are in a challenging spot. They're fighting to stay listed on the Nasdaq, which is a fundamental requirement for most publicly traded companies wanting to attract investors and maintain liquidity. The fact that they received this notice indicating they don't meet the minimum market value suggests that the market, meaning investors, currently values the company below that $35 million threshold. This could be due to a variety of factors such as disappointing clinical trial results for their drugs, competition from other companies, or overall market sentiment towards biotech companies. The extension until the 14th of November gives them a narrow window to potentially improve their market value. This could happen if they announce very strong positive news, perhaps a significant partnership, a major breakthrough in their drug development pipeline, or even if there is a broader market rally that lifts all stocks, including theirs. However, the stark warning that there is no assurance they will regain compliance means the odds might not be in their favor. For investors, this is a high-risk situation. While the potential reward could be a successful turnaround and continued listing, the risk of delisting is substantial. If CURIS Incorporated is delisted, its stock might end up trading on over-the-counter markets, which are typically much less liquid and have lower trading volumes, making it harder to sell shares and potentially leading to a significant drop in asset value for shareholders. It also signals a lack of confidence from the investment community in the company's near-term prospects. The company's future direction hinges entirely on its ability to either drastically boost its market valuation or find a way to meet Nasdaq's requirements within this very tight timeframe. The key risk here is a continued lack of positive market sentiment or any further setbacks in their business operations. The opportunity, though slim, lies in a truly game-changing announcement that could reverse market perception. Alright, that is our breakdown of CURIS Incorporated's latest filing. What is your take on their fight to stay listed and what this means for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community linked in the description for more real-time discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.